Imagine waking up one day and realizing the car you drive might lose most of its value, and no one told you. Sales are dropping, dealerships are closing, and some of your favorite brands might disappear entirely. Today, we're counting down 6 car brands that are struggling to survive. Some are the result of bad decisions, some scandals, and others just got crushed by the competition. The number one brand might surprise you, because it's still selling, even while teetering on the edge. Stick around to find out which one it is. Infiniti was Nissan's luxury answer to Lexus, BMW, and Mercedes. Cars like the G35, FX series, and the QX80 built a loyal following thanks to strong performance, Japanese reliability, and sleek styling. But over the years, Infiniti has lost its edge. Sales in the U.S. dropped from over 150,000 units in 2017 to just under 60,000 in 2024. That's a huge decline. Standalone showrooms were closed, and now most Infiniti models are sold alongside regular Nissan vehicles. While that keeps costs down, it hurts the luxury experience, something buyers care about deeply. Reliability is generally solid, but past problems, including CVT transmission failures, engine recalls, and airbag defects, have damaged the brand's reputation. Infiniti also tried to reinvent itself several times. Instead of improving the cars people loved, it pivoted to generic luxury SUVs and crossovers. That alienated longtime fans. Today, the brand's lineup is minimal, just 2 SUVs, the QX60 and QX80. Sedans and smaller vehicles are gone. That means fewer options, fewer sales, and a shrinking dealer network. If you're thinking of buying an Infiniti, consider this. You're getting a well-made car, but the brand itself is losing ground fast. Resale values are dropping, and future support could be limited. For now, Infiniti owners are watching the clock on a brand that's fading from the spotlight. Mitsubishi is a brand with a rich history. Back in the 2000s, it was known for rally legends like the Lancer Evolution, dependable SUVs like the Montero, and cars that combined performance, off-road capability, and affordability. At its peak in the U.S., Mitsubishi sold over 340,000 vehicles in 2002. Today, that number is just a fraction, under 90,000 units. That's a steep decline in less than 2 decades. Several factors caused this collapse. Tariffs and trade delays have slowed deliveries, making it harder for dealerships to meet demand. Higher prices made budget-conscious buyers think twice. Mitsubishi's lineup has thinned to a handful of SUVs and crossovers. Popular performance and off-road models are gone. The cars that remain are outdated, and competition from brands like Toyota, Kia, and Honda outperforms Mitsubishi on almost every front. The brand's reputation has also taken hits from past scandals. In 2000, Mitsubishi was caught covering up serious mechanical defects. That shook public trust. In 2016, the company falsified fuel economy data for hundreds of thousands of vehicles, leading to lawsuits, police investigations, and executive resignations. Nissan had to step in and buy a controlling stake just to keep Mitsubishi afloat. The legacy is still there, but the vehicles no longer live up to it. For owners, that means cars that depreciate quickly and fewer options for aftermarket support or dealerships. If you're considering a Mitsubishi, it's crucial to research carefully. While the brand has reliability in its DNA, the limited lineup and declining resale make it a risky long-term investment. Genesis was born with a bold promise. Take on the likes of BMW and Mercedes. Offer luxury cars with advanced technology, premium interiors, and striking designs, all at a fraction of the price. At first glance, it seemed perfect, affordable luxury. But here's the problem. Luxury buyers don't just want value. They want status, and many still see Genesis as just a Hyundai in a fancy suit. Sales aren't terrible. In the U.S., they moved around 75,000 units last year. But compare that to BMW selling over 370,000 or Lexus at 345,000, and you see the gap. A shiny logo or a redesigned grille isn't enough to compete in the luxury world. Reliability has also been a concern. Recalls hit several models, including fuel pump failures that could cause sudden stalling. Even the EVs, like the G80 and GV60, faced power loss issues. Every recall chips away at customer trust, and in luxury, trust is everything. Imported parts and tariffs have also driven prices up, making some models less competitive. And the EV strategy? It's shaky. The GV60 isn't performing as expected. The electric G80 was pulled, and reports suggest the G70 and GV70 EV models could disappear soon. For Genesis owners, this paints a worrying picture. A brand still selling cars, but slowly losing relevance, identity, and value. The big question is whether Genesis can find a clear vision and build the prestige needed to survive, or if it will fade quietly, leaving owners with rapidly depreciating vehicles. Jaguar is a brand built on elegance, style, and power. Owning a Jaguar was once about more than transportation. It was about status. Sleek sedans, roaring sports cars, and that iconic leaping cat logo made the brand a symbol of British luxury. Today, Jaguar is a shadow of its former self. Their lineup is tiny, with the F-Pace SUV being the only widely available model. Classics like the XE, XF, F-Type, I-Pace, and E-Pace have all been discontinued in multiple markets. The decision to pivot aggressively to electric vehicles created a product vacuum. The EVs aren't expected to hit showrooms until 2026. Meanwhile, dealers have almost nothing to offer customers. Sales have been declining for years, and at this point, numbers are so low that they barely register in the market. Chrysler was once a household name in America. The brand defined family transportation for decades. It gave us the minivan, a segment that transformed family vehicles, and iconic cars like the Chrysler 300, combining performance and comfort. At its peak, Chrysler sold over 640,000 vehicles in the U.S. Back then, it was a symbol of reliability, practicality, and American engineering. Families, car enthusiasts, and fleet buyers all looked to Chrysler as a trusted choice. Fast forward to today, and the picture looks very different. By 2024, sales had dropped to under 125,000 units, an 80% decline from its peak. Rivals like the Honda Odyssey, Toyota Sienna, and Kia Carnival offer better technology, stronger reliability, and slower depreciation. Meanwhile, Chrysler has relied heavily on aging models. The Chrysler 300, once the brand's flagship sedan, was discontinued in 2023. The Voyager remains mostly fleet-only, and the Pacifica, their main consumer vehicle, is struggling to keep pace in a competitive market. Even attempts to reinvent the brand through electric vehicles have failed. The Airflow EV, which was meant to be Chrysler's comeback project, was canceled mid-development as costs soared and the design was already behind the competition. The dealership network has also shrunk. Fewer locations mean less exposure, lower sales, and limited access for owners seeking service or parts. Former Stellantis CEO Carlos Tavares warned that several brands within the group could disappear by 2026, and Chrysler is seen as one of the most vulnerable. For current owners, the stakes are high. Cars depreciate faster, service options are limited, and spare parts may become harder to find. Buying a Chrysler today comes with a very real risk of ending up with a vehicle abandoned by its own manufacturer. For fans of the brand, the decline is painful to watch. Nissan was once a global automotive powerhouse. The brand delivered some of the most iconic vehicles of the last few decades. The GTR, Altima, Armada, and Frontier, just to name a few. Reliability, performance, and innovation were the company's hallmarks. But now, Nissan is facing a serious crisis. U.S. sales in 2024 were around 865,000. Not bad on the surface. But worldwide, the story is much worse. Global sales have fallen from 5.8 million in 2017 to just 3.3 million in 2024. Operating profits have plunged, and the company reported losses of roughly $4.5 billion. The brand's flagship sedans are gone. The Maxima was discontinued in 2023, and the Altima is following the same path. Factory closures, layoffs of nearly 20,000 employees, and canceled EV projects paint a grim picture for the future. Corporate scandals have also weakened trust.
In 2018, the CEO was arrested for misusing company funds, and multiple emissions and fuel economy issues have further tarnished Nissan's reputation. Attempts to merge with Honda fell apart, leaving the company searching desperately for alliances and investors. Despite still selling vehicles, Nissan has very little room for error. Analysts estimate the brand has roughly a year or slightly more to secure a major investment or risk severe downsizing. For buyers today, this is a serious warning. Purchasing a Nissan isn't just about the car, it's about the survival of the brand itself. Owners could feel the consequences first, from faster depreciation to shrinking support and service options. Nissan's situation is a reminder that even giants of the auto industry aren't immune to collapse. Strategy, corporate governance, and consumer trust matter just as much as the vehicles on the road. If you're considering a car from any of these brands, take a step back and think long-term. Your vehicle shouldn't become a financial burden, and the brand behind it should have a future you can trust. Which of these struggling brands surprised you the most? Have you experienced issues with any of them? Drop your thoughts in the comments and don't forget to like and subscribe for more Insider Automotive Countdowns. See you in the next video.